প্ৰিয় শিক্ষাৰ্থীসকল, কৃষ্ণকান্ত সন্দিকৈ ৰাজ্যিক মুক্ত বিশ্ববিদ্যালয়ৰ বিদ্যায়তনিক দৃশ্য শ্ৰাব্য অনুষ্ঠানটিলৈ আপোনালোকক স্বাগতম জনাইছো। স্বয়ং প্ৰভা DTH চেনেল 20ৰ যোগেদি শিক্ষাৰ্থীসকলৰ অধ্যয়ন কাৰ্য অধিক মনোগ্ৰাহী আৰু ফলপ্ৰসূ হোৱালৈ লক্ষ্য ৰাখি বিভিন্ন বিষয় সামৰি আমাৰ এই বিদ্যায়তনিক অনুষ্ঠানটি সজোৱা হৈছে। আহকচোন প্ৰিয় দৰ্শকসকল, আমাৰ আজিৰ খণ্ডটিৰ মাজলৈ আগবাঢ়ো।
Hello learners, in today's session we will discuss about financial markets, which is under Unit 8 of Business Environment under the course of MCOM first semester. Financial market is a system which facilitates the buyers and the sellers for trading of financial instruments like treasury bills, bonds, equities, various international currencies and derivatives, etc. Unlike general market, financial market does not only mean a specific place. It is a system. Financial markets facilitate the interaction between those who need capital with those who have capital to invest. Financial market, as you all know, are the components of financial system. Financial markets are essential for speedy economic development. Hence, financial markets are called the backbone of the economy. They provide monetary support for the growth of the economy, and therefore the growth of the financial markets is said to be the barometer of the growth of country's economy. Financial market can be defined as the market in which financial assets are created or transferred. It provides facilities for buying and selling of financial claims and services. Financial market enhances the efficiency of capital formation. It facilitates the flow of savings into investment. Financial markets deal in financial securities, also called financial instruments, and financial services. Now we'll discuss about major participants and players in the financial markets. There are 5 categories of participants in the financial markets, and they are individuals, firms or corporate bodies, governments, regulatory bodies, market intermediaries. First of all, individuals. Individuals like you and me can participate in the financial markets. Various business firms or corporate bodies, commonly known as companies, can participate in the financial market. Either central or state governments can also participate in the financial markets. There are some regulatory bodies, those participated, those are the components of financial system, financial markets. In the case of India, Reserve Bank of India and Securities and Exchange Board of India are the 2 regulatory bodies participated in financial markets. The last one is market intermediaries. Market intermediaries are also called market middlemen. They are lead managers, transfer agents, depositories, clearing corporations, share brokers, credit rating agencies, underwriters, custodians, portfolio managers, mutual funds, investment companies, etc. Now we're going to discuss the functions of financial markets. Financial markets play a vital role in the economy. It provides facilities for interaction between the investors and the borrowers. It provides pricing information resulting from the interaction between buyers and sellers in the market when they trade the financial assets. It also provides security to dealings in financial assets. It ensures liquidity, to provide a mechanism for an investor to sell the financial assets, and it also ensures low cost of transaction and information. Now, we can classify the financial markets from various angles. By nature of claim, financial markets can be divided into two parts. They are debt market and equity market. Debt market is a market where fixed bonds and debentures or bonds, fixed bonds and debentures or bonds are exchanged. Equity market is the place for investors deal with equity. From the point of view of maturity of claim, again financial markets can be divided into two, and they are money market and capital market. Money market is the market for monetary assets and short-term funds such as treasury bills, certificates of deposit, and commercial paper, etc. up to 1 year duration. Maximum duration of the instruments of money markets are 1 year. The capital market trades the medium and long-term financial assets. We will discuss money market and capital market in the later sessions. From the point of view of timing of delivery, financial markets also can be divided into cash market and future markets. In cash market, cash market is a marketplace where trade is completed in real time, whereas the delivery of products are taken in the future specified date in the case of future market. From the point of view of organizational structure, financial markets also can be divided into exchange traded market and over-the-counter market. Exchange traded market has a centralized system with a pattern procedure, whereas in the case of over-the-counter market, it has a decentralized organization with customized procedure. Here in this session, we have discussed about the meaning of financial markets, their functions, and their classifications. In the next session, we will discuss about money market. Thank you. Hello viewers, in this session we will discuss about money market. Money market is a market for short-term funds. It deals with financial assets and securities which have a maturity period ranging from a single day up to a year. It is a wholesale debt market for low risk, high liquid, short-term instruments. This market is dominated mostly by governments, banks, and financial institutions. Now we are going to discuss about the characteristics of money market. Money market is a market for short-term financial assets that are close substitute of money. It is a wholesale market for short-term debt instruments. It is not a single market but a collection of markets for several instruments. It facilitates effective implementation of monetary policy of a central bank of a country. Transactions are made without the help of brokers. Here in money markets, it establishes the link between the central bank and the other banks. It is basically on over the phone market. Money market is basically over the phone market. The players in the money market are central banks of the country. In the case of India, there will be a central bank. In the case of other countries like USA, there are several central banks. So I have mentioned central banks, governments, commercial banks, brokers, and other companies, organizations relating to short-term funds. Now, we'll discuss the functions of money market. As I have mentioned earlier, money market plays a vital role in the economy. The first function of money market is it facilitating adjustment of liquidity position of commercial banks, business undertakings, and other non-banking financial institutions. It enabling the central bank to influence and regulate liquidity in the economy through its intervention in the market. Money market providing a reasonable access to users of short-term funds to meet their requirements quickly at reasonable cost. Money market is providing short-term funds to the government institutions. It enabling businessmen to invest their temporary surplus funds for short period. It facilitating flow of funds to the most important uses and serving as a coordinator between borrowers and the lender of short-term funds. Lastly, it is helping in promoting liquidity and safety of the financial assets. The instruments which are traded in money market. There are so many instruments traded in money markets. First of all, call and short notice money, then commercial bills, treasury bills, certificates of deposit, commercial papers, repurchase agreements, money market mutual funds, depository receipts like American depository receipt, global depository receipt, etc. Now we are to know about the components or composition of money market. In the money market, there are several sub-markets, namely number 1, call money market, number 2, commercial bill market, number 3, treasury bill market, then certificates of deposit market, then commercial paper market, acceptance market, and collateral loan market. Now, we are going to discuss the characteristics of a developed money market. A developed money market has various characteristics. Number 1, it has highly developed commercial banking system. Commercial banks are the nerve center of the whole short-term funds. They serve as a vital link between the central bank and the various segments of the money market. When the commercial banking system is developed or organized, the money market will be developed. The next characteristic of developed money market is presence of a strong central bank. In a developed money market, there is always a central bank. The central bank is necessary for direction and control of money market. Central bank absorbs surplus cash during off seasons and provides additional funds in the busy seasons. This is done through open market operations. Being the banker's bank, central bank keeps the reserves of commercial banks and provides them financial accommodation in times of need. It is said that without the support of a central bank, a money market cannot be functional. The next one is existence of submarkets. Money market is a group of various submarkets, as I mentioned earlier. Each submarket deals in instruments of varied maturities. There should be a large number of submarkets. The larger the number of submarkets, the broader and more developed will be the structure of money market. Besides, the submarket must be interrelated and integrated with each other. If there is no coordination and integration among them, different interest rates will prevail in the submarkets. The next characteristic of developed money market is availability of credit instruments. The continuous availability of readily acceptable negotiable securities, that is near money assets, is necessary for the existence of a developed money market. In addition to a variety of instruments or securities, there should be a number of dealers, that is participants, in the money market to transact these securities. Next one is existence of secondary market. There should be an active secondary market in these credit instruments. The success of money market always depends on the secondary market. If the secondary market develops, then there will be an active trading of the instruments. The next characteristic is availability of ample resources. There must be availability of sufficient funds to finance transactions in the submarkets. These funds may come from within the country and outside the country. Underdeveloped money markets do not have ample funds. Thus, availability of sufficient fund is essential for the smooth and efficient functioning of the money market. The next characteristic is demand and supply of funds. Money markets should have a large demand and supply for funds. This depends upon the number of participants and also the government policies in encouraging the investments in various sectors and monetary policy of the central bank. And the last characteristic is some other factors. It includes industrial development, volume of international trade, policy stability, trade cycles, foreign investment, price stabilization, etc. These factors also influence the money market. Now, money market can be designed in a diagram. The structure of money market can be designed in a diagram. We will provide those diagrams in the slide. Now we will discuss about the participants of Indian money market. Going to Indian money market. In Indian money market, the participants are, first of all, number one, governments, either state or central governments. Next is the Reserve Bank of India, the central bank. Next, commercial banks, cooperative banks, financial institutions like IFCI, IDBI, ICICI, SIDBI, UTI, LIC, etc. Discount and Finance House of India, various brokers, mutual funds, public sector undertakings, cooperative units, etc. Now we will have to know about the characteristics of Indian money market. Indian money market have some specific characteristics. First of all, number one characteristic is existence of unorganized segment. Organized sector consists of RBI, commercial banks and financial institutions, etc. The unorganized sector consists of indigenous bankers, money lenders, seed funds, needies, etc. In India, we have this unorganized sector, which is a special characteristic of Indian money market. The RBI does not have the control over the unorganized sector, and they do not follow the rules and regulations of the RBI. The next, seasonal scarcity of credit. Another important characteristics of Indian money market is the seasonal scarcity of loanable funds and the consequent high rates of interest during the busy season. But in the off season, banks have surplus funds, so they are eager to lend more and often reduce the rates of interest. The next characteristics of Indian money market is lack of integration. India's money market has several segments, but the segments are not connected with one another. Each part of the money market, such as RBI, SBI subsidiaries, the foreign exchange banks, the cooperative banks, and the indigenous banks, carry on a particular type of banking business or provide a specific type of financial services. Each financial institutions acts independently. The next characteristic is the absence of bill market. The existence of an organized bill market is essential for linking various credit agreements with the RBI in an effective manner. No doubt, there is a treasury bill market in India, but the commercial bill market has not been fully developed. In 1970, the RBI introduced a bill market scheme known as New Bill Market Scheme, under which the RBI rediscounted genuine trade bills. The next characteristic is volatile call money market. The interbank call money market is the market for short-term funds, known as money at call and short notice. The borrowing rate in this market is known as the call money rate. This rate is determined by the market forces, that is, by the forces of demand and supply. The demand or short-term funds originates from the all types of banks, nationalized, private or foreign. Most bankers are either borrowers or lenders, but most banks act as both. Now, we shall have to look into the defects of Indian money market. There are so many defects in the case of Indian money market. First of all, existence of unorganized segment is a great defect in Indian money market. Then lack of integration, disparities in interest rates, seasonal diversity of money market, absence of organized bill market, shortage of funds, inadequate banking facilities, inefficient and corrupt management, limited instruments, limited number of participants, and no contact with foreign money markets are the other defects of Indian money market. Hello viewers, we will discuss about capital market now. The capital market is the market for long-term securities having a maturity period of 1 year or more. This market is designed to finance long-term investments. Capital market refers to the institutional arrangements which facilitate the lending and borrowing of long-term and medium-term funds. Capital market deals in medium-term and long-term loans. It is a market in which long-period securities which has a maturity of more than 1 year are exchanged. The capital market is divided into two parts. Number one, the new securities market called new issue market, also called primary market, which deals with the sale of new securities and shares. And the next one is the secondary market or stock exchange, which specializes in buying and selling of all securities, shares, stocks, bonds, debentures, etc. Now, the instruments of capital market. There are three categories of instruments traded in capital market. First of all, shares. Shares may be equity shares or preference shares. Next one is debt securities. Debt securities may be bonds and debentures. And the third one is derivatives. Under derivatives, there may be futures and forward, options, swap, etc. Now, the participants of capital market in India. In India, we have mainly 5 categories of participants of the stock market. First one is Securities and Exchange Board of India, that is SEBI, which is the regulator of stock exchange, the capital market. Then number 2, stock exchanges. Number 3, companies and corporations. Number 4, investors and traders, and number 5, market intermediaries. About market intermediaries, I have discussed in the earlier sessions. Now, the features of capital market. Capital market has so many features. Number 1, capital market serves as a link between savers and investment opportunities. The capital markets serve as a crucial link between the saving and investment processes, as it transfers money from savers to entrepreneurial borrowers. The next one is long-term investment. Capital market helps the investors to invest their hard-earned money in long-term investments. The third one is helps in capital formation. The capital market offers opportunities for those investors who have a surplus amount of money and want to park their money in some type of investment and also take the benefit of the power of compounding. The next one is capital markets help intermediaries. While transferring shares and money from one investors to the another, it takes help from intermediaries like brokers, etc., thus helping them in conducting their business. The next one is rules and regulations. The capital markets operate under the regulation and rules of the government, thus making it a safe place to trade. Now, we will discuss about the functions of capital market. Capital market has so many functions. Number 1, link between savers and investors. Capital markets plays as a link between savers and investors. It plays an important role in mobilizing the savings and diverting them in productive investment. Capital market plays a vital role in transferring the financial resources from surplus and wasteful areas to the deficit and productive areas, thus increasing the productivity and prosperity of the economy. The next function of capital market is encouragement for savings. With the development of a capital market, the banking and non-banking institutions provide facilities which encourages people to save more money. The next function is encouragement to investment. The capital market facilitates lending to the businessmen and the government and thus encourages investment. It provides facilities through banks and non-bank financial institutions. The next one is the promotes economic growth. Capital market promotes economic growth. The capital markets smoothen and accelerates the process of economic growth.
ইমান সময় আমি স্বয়ংপ্ৰভা DTH চেনেল 20 যোগে সম্প্ৰচাৰিত কৃষ্ণকান্ত সন্দিকৈ ৰাজ্যিক মুক্ত বিশ্ববিদ্যালয়ৰ বিদ্যায়তনিক অনুষ্ঠানটিৰ আজিৰ খণ্ডটি উপভোগ কৰিলো। এই বিদ্যায়তনিক অনুষ্ঠানটিৰ জৰিয়তে শিক্ষাৰ্থীসকল নিশ্চয়কৈ ভালেখিনি উপকৃত হৈছে। পুনৰ আন এটি বিষয় লৈ আমি আপোনালোকৰ মাজলৈ আহিম। নমস্কাৰ।